Welcome to the basics of understanding your financial. To help you understand your financials, I'm going to use George as an example. George wants to start a real estate business. Well, how does George move towards financial freedom? Knowing your numbers could be the difference between where you are right now and where you want to go. There's 6 basic things you need to know to understand your financials. What you have, your assets, what you need to have, capital contributions or liabilities, what you have earned, income, what you have spent, expense, what you take home, net profit, and what you keep in the business over time, retained earnings. Assets, what you need to produce income. Now, assets are those things that we need to produce income. It could be tangible or intangible. So tangible assets are things like cash, equipment, computer. Intangible assets are things like knowledge base, a labor force. George has $30,000 in cash and a computer to help him get started. In addition, George has his knowledge, which is intangible assets. For you to produce income in your business, you need assets. Even if that asset comes in form of your knowledge, you need something that customers can pay for in exchange of cash. Your assets, or maybe you don't have enough assets and you need more assets. So in the case of George, he needs a property. Well, if he only has 30,000 cash and he has his knowledge, he needs to turn that into something that can produce income. Unless you're in the banking business, cash by itself does not produce income. So in this case, George needs to buy at least one property so he can collect rent. In his area, the average property price is $100,000. Well, he has 30,000 cash. He needs to get 70,000. So the 30,000 cash he had in his business, that was a capital contribution from his personal funds. Basically, that's money he put in his business that he does not have to pay back. But that's not enough to get a property. So he needs to borrow $70,000 from the bank, which is his liabilities or debt, in order to get that income producing asset. So once he gets the $100,000, he can get his first asset that can produce income. And with that, he's now ready to produce income. So he just needs to get a tenant to stay in his asset, which is the property, and start paying him rent. Income comes from the asset in your company. So this is what income is, what your customers pay you, or tenants or clients pay you in return for the benefits they receive from your assets. So your assets, like I said, could be your knowledge base, it could be property, it could be whatever. Whatever the asset is, income comes from an asset. In George's case, the asset is the property he purchased. In a service business, the asset will be intangible. It will be normally be in form of a knowledge base or the way the labor force is organized to produce benefits to the customers. George will get income from his tenant when they rent his house. If you're in the service business, your income will be exchanged for the service you provided to your customers. The more income producing assets you have, the higher your income will be. So the more properties that George has, the more his income will be. If you're in the service business, the more your knowledge is, the higher your knowledge is, the higher you can charge. Expenses is what you spend to maintain your assets or produce income. Assets and expenses are similar, but there's one difference. The difference is assets have the ability to produce income both now and in the future, while expenses are used up immediately. That means once an expense has served its purpose, it has no more value, unlike an asset which continues to have value. So take an example, repair. George has his property. Maybe the sink breaks. He needs to call a repairman to repair the sink. So that's an expense to him. However, once that repairman repairs the sink, it's done. There's no future value to it. But however, he's used that to maintain his asset, because if he's not repairing the asset, his tenants are going to move out. So he needs that asset in a good shape to keep that income producing asset. And that's not only true for property, that also works for a service business. You need to maintain your asset. If it's your knowledge base, if it's your labor force, your expenses are used to maintain that asset so your asset can keep producing income. Remember, assets don't have to be something we touch. It could also be intangible. That's a key point. This is so key because this is where the knowledge of this is what gets you from where you are right now to where you want to go. George, we need to pay to buy items to keep his business going, which are expenses. It's not unusual for business owners to become wasteful by incurring expenses that have no bearing to income. Remember, And I say this again, I know I'm sounding like a broken record, but I'm saying it because it's so crucial for you as a business owner to understand this. Your expenses are used to maintain your assets, which are used to produce income. So it might be you do continuing education to maintain your knowledge base, to keep charge so you can keep charging your customers, or making more money from customers or getting new customers. The trick is maintaining a good balance between assets, income, and expenses. In an optimal business, expenses will be used to maintain assets which produce income. The business owner will try to maintain that link and not lose sight of what is important. This is why a lot of businesses go out of business, because they don't understand this concept. This is so crucial for you to get it. And if you want me to do more videos about this, just leave a comment on the bottom, because it's very crucial as a business owner that you get this. So net profit is the excess of income over expenses. Net profit is what you technically take home, but it's not always the case. I'm not going to address this here because it would just complicate this video, so let's just keep moving forward. Regardless, you have a net profit. You want that number positive. You don't want a net loss. If you keep a good eye on your numbers, you should be able to control your expenses well enough so it stays in line with your income. As the income decreases, expenses should go down too. As expenses go up, income should go up too. A well-managed business will show a profit. However, there are instances where some business owners choose to accept loss for a time that plan to gain from economies of scale. And that's okay. The only thing is, don't fool yourself. You got to give yourself an expiration date, or things could quickly spiral out of control. So retained earnings is net profit sustained in business over time. If you never take money out of your net profit, your retained earnings should be the sum of all your net profit since you opened your door. Over time, net profit in the business builds up. The buildup of net profits is known as retained earnings. Think of it this way. If you had a bank account and only made deposits, your bank balance keeps growing over time. Retained earnings is a great place to find money to grow your business. You can see in that chart over there that you can see the longer lines was the retained earnings line. If profits are not being taken out, that retained earnings keeps growing. In a very simple business, retained earnings equals cash, but there are complications that makes it not the case, but we're not going to go into that today. So conclusion, these 6 concepts are 6 most important things you need to know to build your business. Let's wrap it up with George. George purchased an income-producing asset, property. He used debt and capital contributions to purchase the property. The asset produced income, and George incurred expenses like repair expenses to maintain the asset so it keeps producing income. Excesses of income over profits become net income, and net income accumulates as retained earnings in the business. This is the 6 basic baseline you need to understand your business. Later, we'll see where you can find this information in your financial statements. This concept applies to other business models, not just real estate business, but just simplified. I'm just using one business model as an example. Like what you see? Go ahead and click the subscribe button on the very bottom of this video. I look forward to seeing you in future videos.